All right, folks, welcome back to another one of our videos, and welcome to our channel. We got a lot to cover. We got rocket trades coming up here. We'll cover our near-term and long-term price projection. Things have changed because the Fed has spoken today. So we got some Fed news that I need to cover with you, and that will affect our stock as well. It'll affect mortgage rates. Okay, to include an updated short interest, what's going on. We'll even hear from Cramer on CNBC talking with a reporter on being the Rocket Man supporter as well. We have just so much news coming up in the first part here. All right, now the second part here, we got a covered call trade. There was a live trade we did before the Fed spoke this morning. Okay, it was an early morning trade. Okay, so just bear with me on that. And it was a great covered call. We're going to be able to pull some extra money out of it, and then I'll show you my position and teach you a little bit about this dollar cost averaging using covered calls on this stock. This is great information for new folks to need to understand before you start doing any of these covered calls. I don't miss anything in the video. There's lots of free and helpful tips. If you're new to the channel, please click the money icons below or to the left of any of my comments, and then you can view my 90 plus past videos. I'm over 100 now. Please click the like buttons and subscribe. And the first thing we're going to cover is going to be my account right now. Okay, let's go to it. Okay, here's my account right now. Okay, you see all the screen over here? These are all gains that I picked up. Okay, performing covered calls. This is cash, $2,200. And today I picked up, another $240 still in my account. I still have another $1,000 to get. And look at, I was only down this. Don't even worry about that. We got a spreadsheet for all this. And this is incorrect too. I'm still trying to get the Merrill to change it. Now let's go ahead and see our balance, because the stock market did some rocky stuff today. Now the options are moving up and down, and the stocks are moving up and down. We're still at $120,000, guys. With all that movement, everything going in the red and everything going bad and all that stuff, and we're still at $120,000. Just incredible, guys. Just incredible. Only in America. The first thing we're going to do is cover the market. Okay, as you can see, the market was in some deep red before Colin started speaking a little while ago. You can see Rocket here. It is still down by 52 cents. I think it's pretty much at the price where I did a covered call at this morning. Everything's kind of bouncing back, kind of hanging out in the limbo here. Not much stuff going on other than the Fed is still speaking. Let's look at our Rocket here. Now this is the same projection I'm coming up with. Okay, this is the news article on the street that I'm the Rocket Man. This is all about Jim on CNBC. We're going to hear from him in a minute. I believe what they're believing here, that we're going back up to this range here. We're going to be between this 25 or so. And yeah, sometimes it dips down to 24, but the highs are it's going to stay in this channel. 27 down to this 24.50 or so. So as long as we're in that channel there, we're okay. That's why we're doing covered calls. So we're going to hit here, continue reading. Okay, here's a reporter speaking with Jim Cramer.
Just high-flying stocks yesterday was rocket companies, which did have quite the rally, and today it's down. And you tweeted about the large short interest in the stock.
CNBC said it was 45%. I had it at 38% from Bloomberg. But what matters is that I don't know why people were shorted. Now, when you talk about this is a meme, Wall Street bet stock, I don't understand why people didn't buy puts on it instead of being shorted. And immediately that was contradicted by people who just think I just don't know. But they didn't. They were short common. And because they were short common, I'm sure that there were some firms that went bust yesterday. We don't know who. And we also don't know any names, unlike Melvin Capital. But we do know that it was a dumb short. And the reason why it was a dumb short is the company's doing really well. It reported a special dividend. They had great numbers. And I could see that someone says, with rates going up so much, maybe they're going to do poorly. But the company demonstrated when they reported the quarter that when rates go up, they still do fine. Short thesis. I mean, I can understand a short thing, and maybe people were short. I talk about this in the conference call tomorrow. Wall Street bets a very powerful force. So you shouldn't be in a gang tackle short. You're going to lose money.
Okay, I just wanted to cover Jim there for a few minutes there. That he's talking about the company, and he didn't understand why the shorts are still attacking the company. They shouldn't be attacking it because there's nothing there. It's not like a company's going downhill. It's actually going up. So let's go ahead and move on to our short ratio right now. As of February 26, there was a total of 39.6 million shares being shorted. That is a 36.6%. It's based off of a price target of, the price at the time was $25.95. So this is crazy that they have that much of a percentage of the shares short right now. It's just crazy. It just doesn't make any sense. What I'll do is I'll put the short interest stuff down below inside the description area underneath the video. Now let's cover the 10-year. Today around noontime, the 10-year got as high as a 1.687%. That's pretty high. And then after the Fed started speaking, then it started dropping. And is now down to 1.64%. Let me show you what a 5-day looks like. See how we spiked up? And this is the reason why Rocket is still down. It's because of this rate hike. If this rate hike wasn't happening here for this whole day, this covers, actually this was the 12th. It was high up here and then it came down around the 16th and then boom, it started going up a little bit more and then the 17th, bam. It's up there at 1.683. And then it pulled back after the Fed spoke. But it's only dropped as far as it was on 3/12. So we got to keep an eye on this because this affects mortgage rates when the 10-year Treasury goes up. So that means when you go refinance a mortgage or something, it's going to be a higher percentage because of this. So therefore, that's why the share price of Rocket is going down, and that's why the shorts think just because the 10-year is going up, then Rocket should be going down because they're only a mortgage company. All right, now we got the Fed here that's going to speak. This is about the interest rate, about inflation, keeping it below 2% because if inflation gets too high, then it'll put the interest rates go higher.
As you pointed out, we've said that we would continue asset purchases at this pace until we see substantial.
Now, the asset purchases they're talking about is they're going to be buying back. I believe it's $80 billion in mortgages and $40 billion in Treasury every month until they get this. Until the economy gets better. And that's what they're talking about here.
Substantial further progress. And that's actual progress, not forecast progress. So, and that's a difference from our past approach. So, and what we mean by that is pretty straightforward. It is we'll want to see that that the labor markets have moved, labor market conditions have made substantial progress toward maximum employment, and inflation has made substantial progress toward the 2% goal. That's what we're going to want to see. Now, that obviously includes an element of judgment. And when we see, we'll be carefully looking ahead. We also understand that we will provide as much advance notice of any potential taper as possible. So when we see that we're on track, when we see actual data coming in that suggests that we're on track to perhaps achieve substantial further progress, then we'll say so.
Okay, then they're talking about raising interest rates. They're going to keep the interest rate at 0 to 0.5% right now. Now, when the unemployment rate starts going down, then when they actually see the unemployment rate starts going down, that's when they're going to raise the interest rates. So therefore, you're going to see the Treasury at over 2% then. The Treasury is going to go from here, from 1.5, I believe, all the way up to a 1.9% before the Fed's going to raise their interest rate. So you got to be careful on tech stocks and mortgage companies.
Unusual activity from yesterday as well. It's Rocket, RKT. Why? Because Dan Gilbert and Jay Farner are two of the guys behind this wonderful company.
Okay, now let's talk about the Nigerian brothers. Well, they had 37 calls on Rocket for this week, by the way, that expires this Friday. So whatever 37 calls they had for this week, apparently they're going to be worthless. That's what happens when you buy calls. If you don't hit your mark, or if it doesn't move high enough for you, using the Greeks, and you don't take your profits quick enough, and your stock falls down to $25 by Friday or by $30 by Friday, then these things just turn worthless. Remember, an option has an expiration date. So these people that went after the 37 calls, if they didn't get out by now, well, it's going to be kind of rough for them all the way until Friday. We only got 2 more days. This is Wednesday, and the market closes in 3 more minutes. But anything can happen in 2 more days. I just wanted to cover that. Now let's get on to our trade. Folks, currently it's at 8:58 a.m. on a Wednesday. We're currently looking at Rocket position to do a trade. Right now it dropped to about 2.20. And we're going to go take a quick look at the chart. It's dipping here. The low point's at 24.39. The higher point was somewhere around 24.54. So she took a dip off outside of her 200-day average. We're going to be doing a covered call on the Rocket, our Merrill Edge account. So what we're going to do is we're going to pick pretty much at the money here, 24.89. That'll give us 60-something cents here. When the market dips like this, we take a little bit of advantage. This is going to be a buy right. Okay, we're going to buy. This is going to be 500 shares. Expiration date is going to be this week. We're going to go with a 24-something, 24.89. Excuse me, 24.89, yeah. Okay, and then what we're going to do is we're going to look up here to, we're looking at about $500 off this trade. We're going to go ahead and click this, and we hit submit order. Rocket, rocket, rocket. Yes, we got executed. So we're going to pick up some more cash this week. She pops back up to, $25 a share. Look, we had the cover call on it for $24.89 because how it's weird right now because of the dividends. All right, let's go to our tracker. Let's look at what our tracker says now. I already put her in there for you. We bought at $12,295 was our cost. See, this cost premium. Cost. And then to cover it, because we picked at $24.89 for this week, we would receive, if this gets called away, over the $24.89 by Friday at 3 p.m., we'll receive $12,445 for our stock, which will be $150 of profit. Plus, we'll get to keep our premium of $342. So together, it'll be $492 added on to our profits here. Our prospective profits. Because remember, we still have this other option that's outstanding here for this week. But the share price would have to go over $29.89 by the end of the week. There's a big differential here. So if it doesn't get called away, if this one doesn't get called away, no big deal. We'll just roll it over. This one here, if it gets called away, no big deal. It'll go away, and this stocks will go away. But it's okay because we already made profits to add into this position here. So we're averaging down our loss, our buy-in. Remember, we bought in pretty high. We paid for the first 500 shares, we paid $17,366. So now what we're trying to do is offset that. And what you have to do is you have to do covered calls. And covered calls and dividends. Remember, we also got $555 worth of dividends coming in on the 23rd. That's next week. So we're looking pretty good in this position. We're shoring up this position, what we're doing. Now our other rocket, we're leaving it alone. Okay? We're leaving it alone. If it hits it, it hits it. If it don't hit it, no big deal. Look at that potential profit. We just have to go for the next week. Trust me, sooner or later it's going to hit. And we're going to bring in our profits. Okay? These are not too small of profits here. These are pretty large. Together they're 27, almost $2,800 between themselves. I'm just trying to help you guys out here and to use these tools to get you guys a lot wealthier and to get you guys to your $1 million goals or to whatever goals in life you want to have. You know, just because markets go down doesn't mean you have to lose money. I appreciate you guys watching my video today. I hope you guys learned something today while we did that trade. I know the markets are kind of in the red motion right now. We knew the tech sector was going to get hit. If you guys have any ideas for our future videos and stuff like that, put them down below in the comments. If you have certain trades that you want us to look at, put them down in the comments as well. And if you like the video, please click the like button so other people can see these videos. And then also subscribe. If you don't subscribe, you can't get my other videos. You just have to hunt mine down whenever you want to find a video of mine. Okay, thank you guys again. And you guys take care of yourselves and have a good Wednesday. This is Sonny. I'm out.